Bitcoin's continued to extend its run to the upside, now topping out at $36,000. This has been a 12-month winning streak for the Bitcoin bulls. So I'm not sure how the macro Bitcoin bears feel about this, still waiting for their $10,000 BTC, but I'm sure they're probably not here at this stage. But fortunately for you, you still are. This is where the gains are made. Early stages of the bull market. This first stage is still just here. But like we've talked about when it comes to the 3 years up, 1 year down, we might be coming towards the end of the first year of the Bitcoin bull. Not to worry, we've got heaps to get through in today's video, especially some of the macro stuff looking to the upside where when Bitcoin hits this significant target, it doesn't go back. So we've got those targets to get through in today's video, along with some massive stuff that the SP 500 just did, literally just did overnight, extending its upside to 4 straight days up, higher highs, higher lows, huge targets to the upside. I want to tell you about this and what it means to the market, which looks similar to what happened at the cycle low in 2022. So all positives here for the upside in the market. It looks like a lot of the bottoms have been made, but I want to go through the data and the details here because that's what you subscribe for, hitting the like button as well. I just need your help there to get that triggered. Let's see if we can get over 2,500 likes. I know, I just enjoy that. Anyway, link top of the video description is for tiacrypto.com. You know the deal, name and email, and you get your free access into the Discord here to check out the newsletters. You'll also get that once every week, the big newsletters as well, and then obviously the trading results. Congratulations to our members who are crushing their trades as the markets are volatile, the markets are moving. All right, let's start with the macro cycle here. This looks like it is still in play. This is the years with big first half tend to bottom right here. I mean, we can't deny this right now. We've just seen October have a bottom and now push up relatively strong. It's not over yet. I always have to include that as well because, we can't guarantee anything in the markets, but we're just following the cycles and weighing the probabilities on our side as traders and investors. And so what this next section of the market says, November, December, is that we typically see the cycle run up. That does not mean that we run up and take out all of the previous highs that we've just put in, because remember, we're looking at the green line here for the SP 500, and those highs are still there in the market. All we've seen is the market basically come down and now push back up relatively strongly, I might add, and I'll look at the data as well to show us what potentially comes next to that, which is obviously good news for at least the macro bulls. So we're still within this particular roadmap of what happens for the S&P 500. All it's saying here is that you see the trend up. Don't worry about the market breaking out of highs like it has done in the orange line here. Just focus on what the cycle is looking like right now. And we just need to look at, well, what happens next? Well, it typically turns up from this point. Okay, so far we've seen that. Next thing is when half of the bear was recovered, stocks never moved back to new lows based on the data and the facts that have come from history going back to the 1950s for the S&P 500. None of my opinion is here. We're not forecasting any models. We're just looking at what the facts have said, and we have covered this on the channel before, but I just want to remind ourselves what happens here is this is going to help us out for the Bitcoin chart as well. 50% of a bear market recovered, meaning from that low to high for the S&P 500, this marker right here to here, and you're 50% through the middle. Once that's recovered, this market does not go back to new cycle lows. That's just looking at the data. Okay, well, let's get on to the next piece. And what we're waiting on this week, basically what the fundamentals can be, what the narratives are directing our attention towards, trying to confuse us and tell us that things are still worse than what they were, even though we've seen the market bounce up. This has been happening for over 12 months now. We have the employment data coming out. So what are we doing with that data? Nothing at this stage. All I'm doing is bringing it up so that we are aware of what the narratives might switch to in the news, depending on what the actual number comes out as. We have the previous number, we have a forecast number, and then of course, depending on what that next number, the actual number comes out at, is going to determine the news headlines for that 24 or 48-hour period. That's all this stuff is typically used for. Hopefully you can see that by now on the channel as we continue to come back to this and basically show how, well, I want to say unimportant a lot of this fundamental data of this type when it comes out, how it doesn't really matter to the markets. But of course, everyone's going to make their own decision and say, well, it does or it doesn't. I'm just letting you know my opinion based on my 16, 17 plus years of experience with how I've been reading the markets and how this particular data works into the markets. Anywho, moving on to the S&P 500 and the big stuff that has just happened in the last 24 hours. You can see we've got one day here, October 30th, 31st. Now we have the 1st and the 2nd, 4 clean days up, higher highs, higher lows. Obviously, you can start to see the move gets a little bit extended now. You can see it starts off small and short, and basically people are unsure if this is going to be the move that takes it higher. And then you start to see a push faster and faster towards the end of the move, potentially the end of the move. We haven't seen the end just yet, so I'm not going to call it the end. But essentially, as it goes on, more people get more confident, and that's why you see people rush into the move. Happens on short-term timeframes, long-term timeframes, you name it. It's the same human psychology that happens time and time again. No matter if some retail folks sitting at home or sitting on the toilet watching YouTube, or if you're a fund manager out on Wall Street, possibly playing at the highest end of the game. Everyone has the same emotions, and they're probably more emotional than the masses. So anyway, market's up here. You get the idea. What I want to look at in terms of the actual data is the price move to the upside. So paying particular attention here, the move here in the points, 217.5. We had a 5.28%, call it 5.3%. This has now outstripped each of the entire moves to the upside. So we're starting to see an overbalance here, an overbalance in price. We're seeing a lot of push to the upside from the buyers. This is just the facts from the chart. No subjective or emotional data right now. 4.6% was the last move with 195 points. And then prior to that was a 5% move at 216. So very, very close to that previous move that the market did from August into the peak of September. Roughly a month there, move to the upside. So we still have a fair bit of time to allow this move to unfold and not move to a new cycle low. Keep that in mind. But so far, this is looking strong based just on the facts that we're seeing here from the chart. What does that mean overall? Well, let's have a look at what happened at the cycle low, at the October cycle low. You can see from the move into that final low, which we now know is the final low, there was the October 13th bottom on Thursday. The previous moves, the previous bounces within that downtrend were 7.5% and 7%. So basically 291 and 248 points. Why does that matter? Well, the move out of that low got to 320 points and 9%. So by the time it got to this day here, you can start to see that it's possible, so this day right here, that it's possible that this is now calling the bottom, and you're seeing the market reverse, putting in more price to the upside and more time, in this case, to the upside. So we still have a bit more time to go to get to that point. So this is a strong sign happening in the market while the fear was maximum. The fear was at this time in October last year, if any of you remember, which, I mean, the majority of people don't go back to those sort of things. They just keep calling bearishness and fear porn. That was very, very fearful. And the masses were saying the market was going to break down from 3,500 points, which was this particular low here. You can see the number there. They were saying it was going to break down and come back to these lows and then back to the COVID crash low. We now know that was completely incorrect. Of course, there are still some saying that's what's happening now, but just keep an eye on this, and it's the market giving you signals that there is a turn happening at the moment based purely on the data that they are presenting with you here, the facts that are in the chart. So you can see that coming up. And the price and the closes are getting very close back to the August drop as well. So once this gets back above roughly 4,400 points, that's going to be another nail in the coffin to the, I guess, bearish narrative to take out the previous lows at 41 and potentially the 50% level at 4,000. We're not there yet. You know the deal. Keep your eyes on the prize. There are no guarantees, but if you can pick these things up early in the piece and you've got a plan in action, well, you're probably going to fare better than 95% of people out there, because you can see the results that they all get out there. All right, the Nasdaq's also doing a similar sort of thing here. Obviously, they move quite similarly. If we go on the daily chart, you can see the move to the upside. It's been 5 green days 4 of those days had higher highs and higher lows, whereas you can see this day here was an inside day. If you prefer your candles, that's what it looks like. You can see clearly that you had higher highs on the bars and higher lows as well. So that's a good sign. It's taken out the swing top for the move down, and it's back above all of those previous support levels back from August, September, October, and mid-October as well. So that's, again, another nice strong signal to see. Similar to what happened at those lows. You can see it punched down slightly below the June low. And at the time in 2022, we talked about that being a very significant low in June of 2022. I wasn't sure if the market was going to break down below that low, but it seemed like that was a very good spot for the market to hold out and start to form a base. That base took a very long time, roughly 10 months or so. I'm not saying it's going to be 10 months this time because it looks like it's a smaller base. It might be a shorter time frame, but you can see how the patterns play out at these lows and fool the masses at the bottoms. Speaking of the masses getting fooled, if you need more data, here it is here. Smart money versus dumb money confidence spread. We saw the peak in this spread at excessive pessimism, which is the green line at the top, which I assume is that way around because it's a good time to buy just based on this particular chart here, not telling you to buy, of course. But you can see that there was excessive pessimism at each of these particular lows, and now the market's starting to roll over back towards excessive optimism down to the red line. Nowhere near it yet, not even at the 0 point, but you can see that it started to roll over as the market is heading up from these lows. You had a divergence here, lower highs in the pessimism, and then lower lows here in the price itself. So people were getting less fearful or less pessimistic about price, even though price was going lower. Okay, keep that in mind. This looks like it is starting to work its way higher, and of course that level around 4,400 points for the S&P. So now we get an idea of the overall background here for the markets. We can start to have a look at the Wall Street cheat sheets and a few other bits and pieces before we hit those major things for Bitcoin. Again, where do we currently sit? I know a lot of people are still probably angry about missing the bottom. They're probably depressed about missing the bottom, but it seems like we are in the disbelief stage of the market. And once we break out of those significant highs, probably from the July period of 2023, we start to head into that hope, probably somewhere between this period here. So just keep an eye on this as well. We'll come back to the Wall Street cheat sheeters. The feelings come heavily through the market. Now, the US dollar is still not breaking past 50%. It has been rejected again. It worked its way higher, still higher. It's turned into higher highs and higher, well, now lower lows. So we're getting a undecided market action here. Market trend is undecided because you have the high highs, high lows. You had big volume at the top again when it got rejected. So that's not a good sign for the bulls. This is on a daily chart, of course. And if we start to see this market trickle down and break that 105 level, that is going to be a key signal that the market is likely heading lower just based on the technicals on the chart. You can see how important that 105 level is just from the recent history. Take it back to even further back to this year in 2023. There's your March period. Take it back again to January and again to November 2022. And we can take it all the way back into early or mid 2022, where this 105 level has been quite significant to the market. Resisting, support, then a breakdown through this level. So it's a pretty critical level, I would say, just based on the technicals here on the chart, that if it breaks down from that, then it's going to have another hard time testing it to come back above that level. Weaker USD, probably good, not confirmed, but probably good for assets, your stock markets, Bitcoins, etc. Speaking of Bitcoin, here we are. It's having a little bit of a pullback again, 34,500 after reaching a peak of 36. That's on the daily chart. We had a fair bit of volume to the upside, and just recently we had a little more volume trying to break out of those highs. Yesterday had lowering volume with a reversal. What we've seen in the past with a reversal is when the volume is high, that stops the market because you're seeing a lot of late buyers come through. They're getting pushed back down by the sellers, so a lot more supplies coming into the market. That's the read here on the volume. And you don't see the demand come back in until later in the game. You can see the volume drop off as the market's heading higher because the supply is running out and you're still seeing buyers stay around. Less sellers, just enough buyers to overcome the selling. That's why you get a lowering of the volume that coupled along with the weekend, they're tricking us here in the weekend, and then you get that pump through to break out of those highs. This time round, however, we're seeing lowered volume. So we need a little more data to come through to give us a clearer answer here. We're going to continue to see the higher highs or the lower highs and the market come back to test some of these support levels back at 32 or 33. But the big thing when we bring it out to the macro piece here is the pump up to the upside. So in terms of this big macro signal, looking at the monthly swing tops using our Gann swing indicator, and you guys know where you can find this. It's a link in the video description right down here, Gann swing indicator. That gives you the trend of the market. You can see the actual swings that are happening on any time frame, and you can adjust those time frames to suit your own trading. The beauty about it is that it's done automatically using the indicator here, based on specific Gann rules, not just any sort of zigzag, but specific Gann rules that Gann came up with over 100 years ago, and they still work in all markets today. So looking at these particular swings, that was your monthly lower swing top to our cycle low. The 50% level right through the middle. So we take it off log, you can see that that is your 50% there at 32K or 31,850. That one has broken. When the market breaks that particular monthly 50% level, it doesn't come back to lows. However, even a bigger signal here, which is not far off, is the entire bear market range 50% level. So we've got the $15,000 low, you've got the $69,000 top, and the 50% through the middle, 42.2. It's a number that we keep coming back to because of the importance to the overall structure of the market. So that's roughly 21, 22% away from the market right now. So not that much when you think about it. $7,500 move for BTC. Just last month in October, Bitcoin did 7,700. So it has done a move like that already in this 12 months up from the low. Is it going to do it again? Anyone's guess. I'm not trying to predict that whatsoever. It could be a month or two away. We don't know, but it's not that far off, and it's closer to that 50% now than it is to the low, and it has broken out of 32,000. Let's take a look back at the previous cycles just to confirm this particular info, the data here. There's your first monthly lower swing top, May 2018. The cycle low, 50%. The market broke out of 50%. Now it's higher. And even on a black swan event, it did not push the market down further. The next thing I want to look at is also what could be a possible pullback percentage. So we need to see where this market tops out. And then what are those moves to the downside? What could that look like? So you can see here in the 2019, 2020, it didn't fall all the way back. We moved the market up to the entire bear market move of 2018. It hits 50%, didn't close above it. We've covered this before. And the market still didn't get below to a new cycle low. So the 50% level is pretty variable, very, very important in these cycles, just like I pointed out with the SP 500. So the Gann rules work on all markets. It's not just for S&P, it's not just for Bitcoin or whatever. You can see that it's just charting human emotion. And the better we can read it, the better we're going to be at trading. So we can see here that the 50%, very important there, it didn't break back down underneath that cycle low. The cycle before it, 2014 into 2015, there's your monthly lower swing top. So a very important level there. That's pretty much where you can see a lot of buyers coming back into the market in the hopes that the market's going to pump up again because they missed the psychology here is that they missed the previous bull market and they're thinking the price is cheap and they want to get it on the bounce. Happened again through 2018. It happened again in 2021. It's the same move over and over again. And that's what is the complacency. That's that complacency bounce. So that's how we are charting that using the tools. So 2014, 2015, cycle low, market hits 50%, does not crash back down to a new cycle low, move it up to the entire bear market of 2014 into January 2015, topped out at 50% around the halving, which we'll look at in future videos again, and the market takes off from that point. So no new cycle low from that point. So we've said many times before, no new cycle low, we're not going to break 15,500 based on many of the specific data points that the market has given us, not only in Bitcoin, because there's pretty much only two cycles here, but going back to the SP 500 or the Dow Jones, which has even more history, over 120 years, close to 100, 125 years. That's the stuff that we are looking at here and applying it to Bitcoin. the rules. It's the rules at work. No matter what economic conditions are going on, it's the rules that work time and time again. Yes, things are different. They're not the same as they were in 1920s, but the rules work the same as they do back then, and they have not broken through World War I. They did not break through World War II. They didn't break through a pandemic. They didn't break down through a dot-com boom and bust. They didn't break down when the interest rates went to 18%. They didn't break down when money printing went out of control. All these sorts of things that the rules have stood the test of time over 120 years. That's what we teach in TIA Premium. Find the details here. Link in the top of the video description. All right, looking at Bitcoin for the last data points here. That's your 50%. The corrections. 2016, we saw 40%, 40.3% to the downside. We also saw a 30.1%. That was after it first touched the 50% level and then pulled back here at 31%. So 31 and 40%. This one is obviously a bigger drop, around 53%. Yes. But of course, we had a 350% move to the upside. So we've got to compare apples with apples. We haven't seen a 50% move to the upside. So it's probably, not guaranteed, but probably not likely we would see such a significant correction. It's all possible, so let's weigh it up as well. All right, and if we do get a black swan, well, that's 60%. 63% is your black swan number here. So depending on where this market tops out, let's use those points there to give us an idea to the downside. We haven't seen the black swan, there's 63%, but again, we haven't also seen 350%. So I think it's a little bit misconstrued to use that number. However, I'll give it to you anyway, and we'll look at it from the current price top. 63% would put us all the way down at 13,000. So that would possibly be one of the only reasons, or the only ways, that the bears could get their sub 15K if we saw a black swan event today. Is that likely? I don't think so. So 63%, it's not one on the cards for me. Let's take it back to 53%. Even 53%, if we actually had a 350% run to the upside, a 53% move to the downside still would not break the cycle low. So I think the cycle low is pretty well, it's done. I've talked about it not getting broken, but you can start to see how the numbers are stacking up heavily against any sort of macro bearish move to the downside. Now, the other two moves from the previous cycle we had with 31% and 40%. So this is if, of course, the market topped out right here at 36,000 and did not make another high from this point, because remember, we've already had a touch here of the 50% level. If it went to 40%, 40% takes us out to 21.5. So it still would not even break the March low. So that's the other low that I've talked a lot about not getting broken. Reasons are right here in the market. Here, it's the data that we are pulling from the past, slapping it on to the current. There are no 100% guarantees. We're just trying to put the probabilities on our side. And if we do that, hopefully we have a better chance at beating the market. And that's why I guess over 90% of people fail in the market, because they don't put the work in. 40% to the downside would only get us to 21.5. Now, 31% move would take us back to those lows at $25,000. So with all that in mind, it seems unlikely, not impossible, but seems very unlikely that we would see any of these prices underneath roughly $20,000, probably even $25,000. We still don't have a top yet in the market. Nothing has claimed itself here as the top. Maybe 36,000 is the top, but we don't have any confirmation of that yet. There could be moves to the upside like I talked about in the last couple of videos here. So this is a post on Twitter as well from a previous video, looking at the range between 32 and 48,000 as potential movement for Bitcoin over the next sort of 6 to 12 months, barring any spikes up or down of that range, pretty much the range, trading range for the next 6 to 12 months where the bodies of these macro candles would be. So keep that in mind. Hit the like and subscribe button if you found some value from the content. Links in the video description for all the stuff I talked about. And of course, check out the pinned comment there for your question of the day. One last thing before I go, big one for the Australians. I have been able to secure some tickets for the Australian Crypto Convention in Melbourne next weekend. If you want to get the details of that, make sure you subscribe to our email list. I'll send out the details via email very, very soon. Link in the top of the video description. Until the next video, take care, have a fantastic weekend. and I'll see you then. Peace out.